Hello, welcome to today's tutorial. And today I'll be looking at investment income taxation from the Zambian perspective. This is in respect to a potential question from UNILAS, the University of Lusaka, and also ZICA students. So in the preamble, let me begin by looking at what is classified to be final tax and not final tax as with respect to Zambian companies. Okay. So according to the guidance as with respect to the Zambian company, we can basically look at what I've cropped here. Investment income. This is income from savings and financial investment. It includes bank interest, building society interest, treasury bill discount, interest on government bonds, DRZ bonds, dividends from Zambian companies, loyalties and rent, and the premiums from letting of property. Okay, the rules, as you can see, there are three categories here. There is a category for interest, the category for letting of property, and dividends. Okay, so the first one is when a Zambian company receives bank interest, building society interest, treasury bill, GRZ bond interest, and loyalties. When a Zambian company receives bank interest, building society interest, treasury bill interest, GRZ bond interest, and loyalties. Withholding tax of 15% will usually have been deducted. Of course, it's from the source. So the amount received is grossed up and included in the computation of the total taxable income. Any withholding tax is not the final tax. So for this category where we are talking about generally interest from bank, building society, treasury bill, GRZ, bond, and loyalties, the withholding tax is not final tax. Hence, if the amount received needs to be grossed up and added on the adjustable tax, taxable profit or income for tax purposes or for tax assessment. That is with respect to interest and loyalties. The second category is income from the letting of property shall be subject to withholding tax of 10%, which represents the final tax. Now, when they say to represent the final tax, it simply means that income from letting of property, which could be rent or any other, will not be assessed for final tax computation. Consequently, I'm just reading. Consequently, rent income is not included in the tax computation. Dividends. Dividends received from Zambian companies are net of final withholding tax, or either for mining companies and the companies that are listed on the Lusaka stock exchange, or 15% of all other types of companies. So for this one, there is no further assessment that should be made for tax purposes. So the only one which qualifies for tax purposes is basically interest from the bank or government, and also loyalties. The letting of property, which could be rent, is not, and dividends do not. So you will see how I will demonstrate this using question 3 of the test, the first test question from UNILAS, on how this should have been handled and calculated. Question 3A, WKK Limited, a Zambian resident private company, made a taxable business profit of 950 for the tax year 2021. In addition, the company also received bank interest of 51,000, dividends from other Zambian companies of 34,000, and royalties of 85,000. The amount of investment income are the actual amount received after deducting withholding tax at source where applicable. The company has no other sources of income apart from the ones already stated. Required, calculate the company income tax payable by WKK Limited for the tax year 2021. Calculate the income tax payable by WKK Limited for the tax year 2021. Let's quickly do this. Bring my questionnaire here, and then below here I can have my solution. Let me enlarge my screen so that you have a clear view. As usual, I'll present it in tabular form. Maybe that's enough. Okay, there. So we start with our business profits. How much was the business profit? The company made a business profit of 950,000. Tax adjustable business profit. $950,000. Okay. Now I need to add income that should be taxed. I need to add income that should be taxed, meaning those income which are not final tax in terms of investment income. So if you look at, the company also received bank interest of 51,000. So this one is not the final tax. So meaning it will be taxed. Dividends are a final tax. Let's go back quickly. Look at the rules. Here are the rules. When a Zambian, that's paragraph 2, when a Zambian company receives bank interest, building society interest, treasury bill, GRZ, so just think of it, any bank interest, withholding tax of 15% usually have been deducted. So the amount received is grossed up and included in the computation for taxable income. Any withholding tax is not the final tax. So this one was not the final tax when it comes to bank interest. So this one will need to be added back. The interest will need to be added back. Let me just simplify it. It's only interest and dividends which are not the final tax. So sorry, it's only interest. It's only interest and royalties which are not the final tax. The rest are final tax. Dividends is final tax. Rent is final tax. Dividends and the rent are final tax. Interest and royalties are not final tax, and they are subject to further taxation. So there we go. So we've seen interest received is not the final tax, and it was 51,000. The company also received bank interest of 51,000. So this one has to be taxed. Interest received. So now you see, when you're grossing up something, the best way is to understand to say, as you received it net withholding tax, meaning that they removed the 15%. So if you want to take it back, you will simply say 100, withholding tax here is what? 15%. So from the 100, when you remove 15%, you say 85. So it's 100 over 85 multiplied by the amount. The amount is how much? The amount is 51,000. So you are grossing it up, meaning you are making it the amount it was before they removed the 15% withholding tax. Are we together? So this one, we are saying 100 divided by 85. I'll have that multiplied by 51,000. I have 60,000. So the gross amount was 60,000 before they removed. The gross amount was 60,000 before they removed the 15% withholding tax. So this one has to be added to the adjustable taxable profit so that it is also taxed here, but will remove a relief of what was taxed from the source. Dividend from any other Zambian company, what did we say? This one we said that it's the final tax. Dividend is the final tax, meaning it will not need any further tax assessment. So we're not going to add it. Loyalties also received of 85,000. We said royalties received are not final tax and they'll be subject to tax. So we are going to assess them for tax. So royalties 85. Loyalties there. So we need to gross them up. We'll say 100 divided by 85. You know why we are doing that? Okay, multiply by 85,000. The reason why we are doing this, we want to bring it to 100%. I had shown in the other tutorial how to cross multiply. So when I'm communicating at an advanced level, it simply means that I had communicated in a simpler way, whereby we're saying at 100%, it is X, we don't know. And then at 85%, it's 85,000, and then we cross multiply, and then the shortcut is this way. So this one is going to give me 100 divided by 85 is giving me that. Multiplied by 85,000, this one is giving me 100,000. So the gross amount is 100,000. So now what we're going to do is now we're going to total the taxable income. Taxable income for the business. So 950 plus 60 plus 100. We have 1,110,000. 110,000 like that. Okay. And then from this, we hammer the tax. The tax rate in Zambia for businesses is 35%. So we hammer 35% of the 1,110,000. What we have? The tax amount. So this is tax amount. The tax amount, 1,110,000 multiplied by 35%. I'm having 388,500 as the tax amount. Now we'll less the relief. the amount which was the tax from the other end. We'll list it from this amount. Okay? The amount which was taxed from the other end. This withholding tax, already taxed. Already taxed from where? From source. Okay. So on that one, we have yes. So from interest received, from the interest received, we have 60,000, the gross amount, multiplied by 15%. That's 9,000. I'll catch it in brackets because I'll list it from the tax amount. Loyalties received. Loyalties received. The gross amount which was received is the 100, which is here. So 15% of the 100. Which is 15,000. Which is 15,000. And then tax payable by WKK. By WKK Limited. So now the tax payable will be 388,500 minus the reliefs from the source, 9,000 minus 15,000. So the tax payable is 364,500. That's how the examiner expected you to answer question 3A. That's how the examiner expected you to answer question 3A. You can also attempt question 3B and C, though I might also provide the solutions for the same, just to see that you're doing the correct thing. Thank you very much for watching this video.